So Canadian stocks climbing higher as those two major banks beat estimates. But U.S. markets, as you saw, subdued. They're ready for NVIDIA earnings, which get reported tomorrow. Let's go to Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management, to talk some more about this. Thanks for joining us today.
Thanks for having me.
Your key takeaways from the Canadian bank earnings we saw today, BMO and Scotiabank?
Yeah, so they both reported great metrics on all cylinders. Revenues higher, ROEs higher, NIMs higher, PCLs, that's provision for credit losses, lower. So everything was a relatively clean quarter for both of them. And BMO announced a new buyback of 30 million shares. So it's impressive to see BMO up as much as it is, even though Nova Scotia a little more. But BMO is already up a little less than 18% year to date. BNS is up nicely as well, over 9% year to date. So everything was great. I did mention in a prior interview before the earnings hit that we were expecting a pretty strong quarter for the financials, both here and in the U.S. There is a few good themes that are working for them these days. Okay, so BMO, which, as you said, beat, is one of your stock picks today. What do you see as driving the stock in the months to come? Yeah, so, we view Canadian stocks as primed to have a strong run into year end. We are bullish on the markets to begin with, as they're acting pretty well. We're seeing 52-week highs on the TSX as we speak. But also the Carney administration perhaps is able to strike a truce with the U.S. on tariffs. And there is a Buy Canada theme, not to mention the whole idea around kickstarting private sector investment. And with the economy holding, GDP, employment holding, and inflation under control, rates are a little more friendly. So we're seeing, policy visibility and the banks generally doing pretty well. The net interest margins are healthy for them, what with rates have come off the zero level of years past, and our checking accounts are still not getting paid. So they're making a hefty differential in the interest rate between long-term and short-term.
Big tech news this week with NVIDIA set to report. It is your second pick today on stocks. Can it continue to grow the way it's growing now, and for how long do you think?
No one knows, but this is a theme. This is what's driving growth in our world right now, whether it's artificial intelligence or cloud computing. That is the growth driver in our lives right now. So we are expecting this quarter to have a little bit of deceleration in growth, but let's just talk about the levels. Gross margins should come in at slightly above 72%. That's a lot. Free cash flow is expected to come in at a little bit less than $24 billion. So China revenue is going to be the trump card. It's basically unchanged in expectations to be about 10% of total revenue. But the outlook for China revenue growth could move the needle. So we'll see. I'm expecting that if they don't beat expectations to some incredible degree, the stock could come in a little bit because people are talking about how expensive it is, but the growth is incredible. We're expecting a revenue growth of 54% year over year, and earnings per share of over $1, which is growth of 49% year over year. So the numbers are very big on an absolute basis. The cash flow is great. The theme is fine. So whether it's going to come in line or a little bit different, the options market is only pricing a 5% move on this stock post-earnings, which in my experience, it's pretty low. 5% is what it can do on a regular day, never mind on earnings. So the expectations for a move are pretty subdued.
Okay, let's talk about September, which we know typically can be a bit more volatile. August expected to be a little quiet, generally speaking. How are you positioning yourself for September?
Yeah, so September can be a little treacherous. I don't know why. Is it people coming back from the long weekend after a really light volumed August? There's a lot of out of office replies this week. Volumes are almost at Christmas levels, and it's just as quiet as then. September, maybe everybody comes back, looks at their portfolio going into year end, want to see earnings visibility. And so what we've done is we've actually taken a little bit of the torque out of the portfolios. We raised a little bit of cash, not much. We're at about 5 to 7%. And, should the markets come in a little bit, as I mentioned, we're not negative on the market, but this is seasonally could be treacherous a little bit. Or just jumpy. So we've taken the volatility a little bit out of the portfolio. We'll take advantage of stocks that we love should that happen. And if not, then we'll just continue on and into year end.
Okay, you had a pick for financials, you had a pick for tech. Your third pick is Imperial Oil. Why are you watching Imperial Oil?
This is a really soft kind of market for oil prices. And yet, if you look at the chart of Imperial Oil, you'll see an outstanding stock. This is a large cap oil company that has all grown up and has decided to be very, very shareholder friendly. Dividend growth, buyback, balance sheet, free cash flow. This is a mature company that knows how to manage their finances, and it's now showing in the stock price.
Okay, we will leave it there. Appreciate you joining us on the show today. That was Diana Avigdor, portfolio manager, head of trading, Barometer Capital Management. Thanks for